to cool. Hi everyone, my name is Josh Davila. I'm the co-founder of Bread Cooperative. We're a worker self-directed nonprofit where we build, in large part, solidarity finance applications using crypto as a way to build them out and expand the existing solidarity economy. And we're also a developer studio, so if you're looking for people to help build your products. But today's talk is called Save Money Like Your Ancestors, Stacks and Other Solidarity Tools. So I'm using what I'm going to do is going to go through a presentation that talks a bit high level of what we've built, and then I'll show you a showcase of what it is that we're shooting for, that we're trying to build out. So yeah, Bread Cooperative, we are, like I said, a worker cooperative. We've built quite a few different applications. One is the Solidarity Fund, in which we combined a local currency with a credit union built on Gnosis Chain, where users are able to give XDAI. In return, they get bread tokens. And what happens in the background is yield gets accumulated and distributed to a set of member projects based on a vote from bread holders. So this product has been around for a couple of years now, and it's been working quite well. And now we're wanting to expand our portfolio and build some more solidarity tools in our tool set so that we can expand the bread ecosystem. And that's why we're talking about stacks specifically. And here are the tools. And then down the line in the future, we have another product in mind called Safety Net, which is a kind of mutual insurance based on the Bread Funds scheme in the Netherlands. But so Stacks this implementation is based on a ROSCA, or a Rotating Savings and Credit Association, which is actually quite common in the Global South and in other places where you don't have easy access to financial institutions and banks. In Mexico, they call them tandas. In West Africa, susus. You may have heard many different names for what is effectively at least very similar type of financial arrangement. And so what we've done is we've created a smart contract version of what is the most basic version of a ROSCA. Each country or culture that does something like this, they'll have a slight variation. It'll be slightly different. So the one that we've made right now is just the most basic version, and in the product that we have so far is basically the proof of concept for being able to use smart contracts to develop this. So how does the saving circle work? Effectively, it's a way to collectivize people's savings while offering zero interest loans. Relying historically, for the most part, on social trust. So let's say we have 3 people in a group who all want to do a saving circle together. We would all of us would deposit the same amount of money in the first round, and one person would receive the full pot. And then in the next round, we would all put in the same amount of money in the pot, and then the next person would get the full pot, and everyone would get their turn in order to receive the full pot of money. And so in the end, once everyone has had their turn, essentially everyone's debts are neutral, are at zero, and everyone's paid off. It's effectively, depending on the position you are in the group, you are either a lender or a lendee, and oftentimes the direction may change, or the ordering may change, that people have a variation of where they sit along that spectrum. And so this is a very basic form of a ROSCA. In places like India, where they do chit funds, it works slightly differently. They'll have a kind of auction system where people can bid on whether or not they take the pot. So those who are willing to sacrifice more early are able to get earlier access to liquidity. But so this system is, why do something like this? I think for some people, if you've lived maybe in places where you have more stable financial system, it may seem kind of strange to do something like this. Why would you intermingle these things that seem your friends with money? But actually, there's a lot of reasons why you would want to do this. One, it allows you to build relationships with others in your group and in your community. There are very small loan amounts as well. You have short repayment periods. the transaction costs are low, and you're putting mainly social collateral on the line, not any other type of financial collateral. So this is particularly useful for people who don't own very many assets, of course. And there's a clear framework of incentives, and it naturally reinforces social ties. A really interesting study in Vietnam found that farmers that participated in ROSCAs were actually significantly better at savings and were able to reach their savings goals compared to those who were trying to save solely individually. So the kind of psychological effects of the social, just kind of like doing it in a social way tends to have better outcomes for reaching financial goals. And so some of the kind of major use cases for saving circles would include major life expenses. So if you're needing to buy books for your children, it's a good moment to receive this injection of liquidity, which maybe if you were trying to save individually, it might be more difficult to save for that. But because you have this social pressure to save money with everyone else, and you know that you're going to receive this injection of capital at the time when you need it, you'll be able to make these bigger life purchases. So you can buy books for your kids, you can pay for medical expenses as they come up, you can buy a car, maybe you have someone in your family who's getting married, so for your wedding. And as well for business expenses, it's really nice to have, you can have effectively a zero interest loan for starting your business. And so if you're planning to make money off the thing that you're putting the money into, then it's a really good deal because otherwise going to a bank, you are going to have to pay an interest rate, and depending on where you are, what your credit history is like, it may be a pretty extractive percentage interest that you'll have to pay because of, like for that loan. And so why a blockchain? So some of you maybe have noticed that with social reputation or collateral on the line, it does mean that there is a space where people can steal money from you, right? Usually, saving circles are done in cash, and one person or two maybe be the ones who are tracking everything for everyone in order to, so that everyone doesn't have to do the math behind a saving circle. And so I know that in Mexico, sometimes the tanda, what they call, is sometimes associated with Ponzi schemes because the person who is managing the tanda will run away with the money. And so this is something that we think blockchains are actually pretty good at trying to prevent, or at least able to track where that money is going and where it is. And rather than kind of relying on purely just trust in somebody else, you're able to rely on the cryptographic guarantees that blockchain enables by offering some kind of decentralized escrow service, right? Where you can put money in the smart contract, so you're not trusting a person, but a deterministic computer code to be able to pass around the money and the liquidity as agreed upon. It also allows you to do a level of collective governance digitally. It allows you to, you have pretty cheap transaction costs, especially on Gnosis chain, where we're building this largely on. It also, I think what's really nice is that although usually saving circles are very informal, with a blockchain we're able to automatically record any movement of funds, and therefore we can also record a kind of credit history for people because they are engaging in loans, right? People, when they do it, they may not necessarily see themselves as giving out a loan or like taking out a loan, but they are engaging in something like that. And so we think this is something down the line where you can bring a lot of people who are not involved in, or are not like able to enter into the traditional financial system to be able to build that credit history so that they can qualify for other things down the line that may be useful for them through that require a credit score. Another thing that's really interesting, I think that that isn't exactly possible without a blockchain, are programmable incentives. So due to people's actions, we can reward them for reaching their savings goals and things like that. Of course, with crypto, you get resistance from debanking. So we know I've spoken to a group in the US that facilitates saving circles and tandas in California for a lot of undocumented people, and they run the risk with a lot of them that they get their bank accounts blocked because they don't have the right documentation or they're not able to access banking services. And of course, there's DeFi, and then there's as well, at some point in the future, we'll have a nice portable identity solution, hopefully. So we have a real demo that is public. If you go to our website at bread.coop, you can find a link. There's a under one of the menu submenus, there's stacks, and you can find it there. Um, if you aren't already in it, I would highly recommend joining our Bread Co-op Friends Telegram group, which is just here in the corner. We'll share some updates there about the product, and then also we'll have a park hangout on Friday if you want to come by. Um, the demo of the actual application right now, we think will be good to do a bit later. So Francisco, who's sitting right there, find him if you want to try out the actual demo of the product. What I want to show you, which I think is more interesting just for this context, is what we're trying to build towards. So I've made just kind of like a vibe-coded demo of the type of features that we want to build towards as a way to illustrate and create a story for what we want to get towards, and see if there are any interesting collaborations and what you guys are thinking about doing and building, so we can maybe team up and see where we align. So yeah, thank you. I'll maybe stop here before I get into it. I don't know if there are any maybe questions just to check in. I explained it really well then. Okay. So this is the kind of showcase of the product. So this is kind of aspirational of where the direction that we want to go with this product. The idea is that you would come to the Stacks website or Stacks application. I mean, it could be that Stacks is actually integrated into other types of applications, but just for this showcase, you would create an account in a way that is more like a Web 2 type of experience. So we want to abstract away the crypto aspects of all of this, and by creating an account through this, like through the Web 2 way, we can just offer you a wallet that's already inside of the application. But you would maybe share a little bit about yourself. So what are you trying to save for? What are you trying to do with this application? And that will help us be able to recommend different types of services or different types of things for you to go for in the application. Continue. Maybe we'll have some type of identity to some degree, privacy preserving in some way, which will be important to explain later down the line. But because this is like peer-to-peer lending, it's something important to have some amount of identity so that we can track who someone is and whether or not they're a trustworthy person. And other people can also verify that this person is who they say they are, and they can trust that this is the right profile for me to start a saving circle with that person. And so I think you'd first start off on the dashboard. So in this case, we're Diego. And Diego has a few different stacks that he's created. And so if we click on Create Stack, the idea is that this wouldn't be just for ROSCAs, but that in fact there are many different types of collective savings types of financial arrangements that we could implement in the application using smart contracts to kind of facilitate them if they make sense. So you could choose with a ROSCA, the classic setup. Maybe you want a chit fund because you're based in India and that's what you're most used to. Or we can do things like competing with your friends just to save a bit of money. We can look into the literature of what other countries, however they do their type of collective savings. There's also things called ASCAs, or Accumulating Savings Credit Association, which is where everyone puts in money and people are allowed to take out a loan based on a certain multiple of how much that they've put in. So that's another version of a kind of ROSCA, but accumulating. And so you would continue and you would put in the information about the circle that you want to join, whatever else, and then you would continue, and it would, well, we skipped it, but it'll ask you to invite your friends, and then you can make it and start it up. And so if we go to the specific ROSCA, where maybe I have a ROSCA with my family, where we're all sharing some money together, I can see here, where I am in the line and who is next in the order. So I know that I received my payout first, so I've already been paid out. So that means that I'm effectively taking out a loan from everybody else, but I will pay it off over time in 3 more installments to these next 3 people in order to pay it out. And so down here, I think we're doing $500 per week or per month. And so the pot that I received in the beginning is $2,000. And then we would have, of course, to try to make this as easy as possible, a kind of automatic depositing system in the back end. So each of these different types of stacks will have a different kind of user interface based on what it is exactly you're doing. So a chit fund you can place a bid in order to make a bid on the pot. If I go back, and so forth. And so this is just like kind of like the high level overview. I can go here and I can look at different types of stacks. I can see the ones that are active right now. Maybe they're pending because someone has set it up and I just need to verify something, or someone else needs to. The ones that are completed, decommissioned. And because collective savings is not just a financial arrangement, it's also a social arrangement. What we think is going to be really important is to have communities, or to have spaces where people have a boundary for who they're interacting with and who they're wanting to find others to engage in saving circles or stacks with. And so we're imagining that this could be set up in many different ways. It could be communities that are based on people wanting to save towards the same goal. So let's say if I really want to buy a home, and I really want to look into a collective savings arrangement as a way to be able to afford my first home, because technically I could afford a mortgage, I just can't afford the down payment, maybe, is the issue. And so I want to find other people who we can each take turns by offering a little bit of each other's liquidity so that they're able to better afford the down payment that is required in order to purchase a home. So in our community, we can scroll down and we can see activity that's in it. We can see the stacks that were started from this community. We can go into the discussion. We can see the forum. We can see what people are talking about. Maybe people are offering tips and tricks for how best to save money for a home, and what are the regulations that are at play for if you want to go begin purchasing a home. You can see the other members, where they are. So maybe you can also find other people within this group that are also, maybe you want someone who is also in a similar context, so also in the same country, and also trying to save for their house. And earlier when you saw on the sign up, we were asking how much are you wanting to save? What is the goal that you want? So we can kind of offer a service to matchmake each other. So I think it's almost like dating a little bit, but you kind of need a little bit of a push to come and meet each other and get to know each other. And we're imagining potentially, some of these communities could have some form of governance in them as well. But additionally, what I think is kind of the most at least on our side, what can be interesting as far as a strategy for sustainability of the product is to offer this as a kind of employee benefit to those who are already engaging in saving circles anyway. So in Mexico, we know that tandas are very commonly done with coworkers. And so rather than just kind of like keeping it purely informal amongst coworkers, an employer is actually incentivized to get employees to achieve their savings goals. Like an employee that is able to achieve their savings goals and achieve the lifestyle that they want within the boundaries of what they're paid is generally a happier employee. And so what we're imagining this is a place where employees would be able to offer matching funds or a kind of incentives for coworkers to effectively get along and try to collectively save money with each other. And if they are successful in saving money together, that they would get a little bit of extra on top of that. So a little bit of incentive to do that. And so inside you can kind of see, maybe internal discussions about the company or whatever else that might be interesting. We'll have to see when we approach employers what they want. And yeah, so that's kind of those are communities. Inside, though, we want a really Web 2 type of experience with the wallet, so you can see, I have this much amount of money and maybe this much amount of cash available. My portfolio is 3,000, but my cash is 2,500, so I have maybe $500 right now that's being deployed in one of these stacks. If I go to trust score maybe, so here, like I said, you're effectively engaging in peer-to-peer lending. So you're building up a a credit history effectively. Like if we are tracking, that you are making these payments or not making these payments, that's effectively the same as making a credit score. And so we think this is really important as a way to build trust within a digital space, that you can see that someone has been able to effectively save money and pay their obligations over time in a way that is effective and builds trust. And so we can kind of create different trust tiers, where if you've completed so many ROSCAs with people, then you're a certain tier, from newcomer to a contributor, that you're reliable, that you're trusted, or maybe you are a pillar of your community because you're always on time with all of your payments. And so this is something that we think as well, especially in the case, this is something we've discussed a bit with in the United States with people who are undocumented, that a way to potentially take this credit history and turn it into something that you can build as a real credit report. So in the United States and also in many other countries, you're able to submit data to credit reporting agencies. So in that way, you can build a credit score in the official credit agencies. So this is something that would take, a bit of research into knowing which countries have this as a possibility and what their data standards are. But it's something that we at least have the basics to be able to fill in that information. Additionally, we think it would be interesting to have matching funds. So to have a way for anybody to be able to provide matching funds so that specific types of people maybe who are reaching their savings goals maybe would be incentivized to achieve them and make a little bit more money. So I'm imagining philanthropists maybe who want specifically to incentivize women in Mexico. So if we could do something like a ZK passport as a type of identity solution where you can say, you can prove that you have a Mexican citizenship and you are a woman, and we just need the ZK proof for that. We don't have to store that information anywhere. Then that way we can validate and we can go to philanthropists and whoever else that they can go and they can effectively, very easily be able to do this type of impact work that they would want to do, and we can prove that impact with on-chain data. And so, yeah, it could be, people who really want to, we can have like an endowment for those who are saving towards homes or saving towards certain goals. Crypto makes it very easy for these types of programmized incentives. And then maybe the last thing I'll show is the marketplace. So like I said, what we're trying to build is effectively the super app for collective savings, right? So whatever kind of financial arrangement that involves collective savings could be an interesting addition to this. And so when you have a lot of people who are saving money, you're also creating a type of power. So the way that often producer cooperatives work is that they pool their money together in order to buy things in bulk. Right, and it's kind of like if you've been to the U.S. and go to Sam's Club or whatever, you go to the grocery store where the bigger thing that you sell, the cheaper it is per item. The idea is that here, with these groups who have money that they're saving together and they're wanting to spend, that they would be able to spend that on things in order to receive discounts on products. Of course, the easiest ones to offer would be digital ones, so maybe you get a Gnosis VPN, hint on with the discount if you buy 10 of them at once. And of course, the science shows psychologically that when you make group purchases, generally people have a stronger attachment to them because they're doing it in like a social setting. So we think there's like a business aspect to all this as well. So we could approach different types of vendors. So yeah, maybe I'll end it there, I think. So have time for maybe some questions, but this is kind of aspirationally what we're trying to go for. We have our proof of concept version is publicly available. Francisco is the one you want to go to, and he'll set you up, and you can try it out. And we'd love feedback on it. It's much more basic than what I showed you here because we're trying to get the base primitives correct before we like really start to expand out. But yeah, and then if you guys come to our our park hangout, then maybe we can also try some saving circles there. But yeah, would love to. I'll end it here and maybe check if there are any questions. Sorry. Oh, we also have a booth downstairs as well if you want to talk.
So thank you for the presentation. I understand this is aspirational, but where do you want to start? Like, do you want to pick one of the savings options and then start there, or do you have a multiple in mind? Like,
yeah. So right now we're starting with ROSCAs because that's what we started with, and then I think the idea is that we're going to start with the communities that we're closest to. So I think part of the still the problem that we have to solve is onboarding. Onboarding is a big issue. So right now, kind of people who have crypto are the easiest ones to approach because they already have stuff on chain. Of course, we right now, there are options, of course, for people to onboard, but to kind of go to people who have never used crypto before and ask them to onboard is kind of like it's a whole thing in itself. But we think that there is a lot of promise in some stuff that are coming out. So we're trying to talk to other service providers like Minerium or potentially Gnosis Pay or whatever else, where they can offer maybe something like an IBAN for users to be able to more easily onboard. So they can just make a bank transfer and then they can have the money in their account. And I think that would feel kind of one way. But I think as well we're hoping to do a pilot in Nigeria. So we have like a group there. We're working with a philanthropic group that offers solar-powered equipment to rural communities in Africa. And the idea is that they would use the money that they save from the solar-powered equipment in order to start a savings circle, is the idea. But I think and then we're also speaking to Logos as well as a potential partner in all this. But it'll depend on, I think they each have kind of slightly different use cases. So the ROSCAs, I think, are going to be people who have, experience with ROSCAs. But in the case with Logos, I think the thing that we're going to have to build is rather than the one person receiving the full pot, it's something where people are just collectively savings, and it goes to like a shared wallet or something like that, where they can govern how they want to use it. So.
I was going to ask a follow-up question, but you already answered it, like which market you were going to choose to run a pilot with. But I guess Nigeria is one of them. Yeah. Have you thought about using MiniPay and like doing a mini app inside MiniPay to like get distribution for that market?
Not yet, but I'm happy to to explore it. Has anyone done a ROSCA before in here? Yeah. For the recording.
Oh, thank you. Yeah, so I think it's very common across Latin America to do this kind of thing where people mostly, well, I know in Guatemala it's mostly women who get together and put in money every month, and then one person gets some cash every month. And it's also like a community event, like they get together and cook food and eat and like gossip, and in the end the money is given out and people use it to pay, different things, but same concept, I guess.
Yeah. Right.
Yeah. So my question is about trust, because those practices that are pretty common in Latin America. For example, how I have encountered them is that my ex-girlfriend, she had a friend who was suddenly started to be very pushy in terms of like, hey, participate to this thing, otherwise she wouldn't get their money back because, they're Ponzi schemes in some forms, right? So, so at least that was how it was imported in Italy, I guess. So they were also sold as a space of mutual support between women, but in reality, it was like a big scam. So here, how do you prevent the people stop paying?
Yes, I mean, I think there are like, of course, like the way it's set up, like it relies on trust, like kind of normally. So you have to be careful with who. Usually, you pick people to do it with that you have some sort of relationship in some way, and that they have some sort of social reputation on the line that they wouldn't want to lose, like to their community. I mean, I'm also curious, like in Guatemala, how if this is, I assume this like is a problem every once in a while, or I don't know.
Honestly, no, I never heard of this happening. I guess the ones I knew about was smaller, like only people who really know each other and have been friends for a really long time, or coworkers, but that have worked together for. It's not like big groups, like maybe 8 people, 10 people. So if it happens, I mean, it would be like a big. Everybody would know you've stolen from your friends. So I guess that's like the big deterrent. It's like everybody knows who you are, and then if you don't put in the money, not only you'll never get invited and all of this stuff, but everybody's gonna know you're a thief. So I guess it's very like community, it's very tied to the community base. I don't know how scalable that trust is, but that's, I guess, the big problem.
Yeah. So like, so I mean, one of the things that I know that like in Egypt, there's a really big digital platform where they do also similar kind of thing as saving circles, but they have like legal contracts that you sign as part of like the sign up. So you will get in a lot of trouble, I think, I think they'll go after you if you don't pay in, and so it's like a very large saving circle effectively. But what we're hoping is that here we can use DeFi to earn a bit of interest out there in order to fund insurance, and potentially offer that as like a separate product or something like that, where people can be insured on these things. Or we just have to, we backstop up to a certain amount or a certain level based on the amount of money that's being spread out. So I think there is trust in terms of we can guarantee that someone someone can't run off with the money in the sense that like they were the ones trusted to control all of it. But if they're the ones who receive like a peer-to-peer loan and then they run away, and then you trusted someone that you didn't know, that you didn't have any relationship with, and they're just an avatar on the internet, then like I think probably the thing that we have to do is provide within the social layer of the application ways to like verify who someone is, and like provide that trust there.
So you said something about a pilot in Nigeria and things like this, but I guess what is always on my mind is how do you bridge this like DeFi money into like real world money, I guess, in a way. Like if a person's in a village somewhere want to participate in this, what's their incentive? How are they gonna use that outside of the internet, I guess?
Yeah. I mean, that's why kind of right now we're largely focused on like digital services, like things that people can purchase online. So anything that is online can be purchased, with crypto one way or another. The other option is we can, just wait for like what are the things that are coming out, hopefully, like over the next few years. So it's also a bet that like it'll get better. And that it'll, it's like either, of course, if they're in a place where they have no access to ways of offboarding, then it's not a good market to work in, I think. But the bet is that in a lot of places it's going to improve, and you will be able to kind of convert by paying either digitally or with a card of some sort, that you will be able to do that. But if you have no internet access and you have, everything is purely in cash, then of course it's going to be really hard, yeah. Cool. All right, thanks so much. Appreciate it.